Welcome to the Statler Financial Radio Show with Philip Statler. Have a question for the show or need assistance with your retirement plan? Give Philip a call today. 863-285-3815. 863-285-3815.
If you follow financial news, you know very well that we have been plagued by negative economic headlines this year, persistent inflation, tax increases looming on the horizon, the possibility of our federal government defaulting on its debt. So it is no wonder that so many people feel uncertain about their financial future. But Philip Statler is here today with some insights on how to navigate all of this negative economic uncertainty. So thanks so much for joining us today on the Statler Financial Radio Show with Philip Statler. He is, of course, president and CEO of Statler Financial Services. And not to be too doom and gloom and doomsday scenario, but my goodness, Philip, we're just up against a lot right now.
Hey, well, we are right now, Jen. You know, it's that time of the season where that old debt ceiling thing comes into play again. Yep. And it's funny how it just seems to catch everybody by surprise. I don't get that, you know, but it does. And that's been a big deal right now. And it's taken a lot of the economic headlines at this point. And so we continue to monitor it because, well, we got a couple more weeks before the doomsday.
Before it actually, right, exactly. And as you said, this is practically an annual drama, or even more frequently than that. I feel like it comes up just over and over and over again. This is not the first time this has been an issue. I'm guessing it probably won't be the last time that this comes up. I don't know, Philip, that we'll have some sort of permanent solve here that just takes care of everything going forward. Jerome Powell is chair of the Fed, and he says it's critical that Congress acts to raise the debt ceiling. Take a listen.
It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite adverse. So I'll just leave it there. We don't give advice to either side.
All right. So Jerome Powell being diplomatic, being impartial there, but
maybe he should give some advice.
There you go. knock some sense into somebody. But, you know, this just continues to be an issue here. And I don't know, Philip, I don't know where the phrase kick the can down the road even came from. I don't know that I've ever actually seen someone kick a can down the road, but that seems like it's what we do.
We've been kicking this can down the road for a very, very long time. And hey, you know, Jen, it would be a crazy thing to think, but we could actually not have to worry about this anymore if we just pay the debt off.
Well, that's true. But then again, of course, everybody's got concerns about, well, what does that look like? Where does that come from?
Because from you and me.
Yeah, exactly. Exactly. That's exactly where I was going with it. I didn't want to be the bearer of the bad news there. But, you know, with all of this uncertainty, Philip, and I'm sure we'll talk about tax increases and that type of thing here pretty shortly. But even people who've done a good job saving wonder if they'll be able to retire when they're this concerned about inflation and tax increases, all that. What's the first step in helping people analyze how prepared they really are?
Well, I think the first thing that people need to do is have a plan in place, because so many people that I talk to, they haven't even started to put together a financial plan. You know, they've ticked all the boxes. Hey, yep, I'm going to be able to play golf. I'm going to be able to go fishing. I'm going to buy the boat. I'm going to buy the RV. But they don't have an actual written game plan.
Sure.
Of how they're going to do those things and still pay their bills. They feel like they have enough, so they don't have to worry. It should be fine. And can be a problem within itself right there, right? Is that, look, we need to have a plan. Plan brings certainty. I wouldn't take off today on vacation if I didn't have a map, a plan of where I was going to go, where I was going to stay, and reservations along the way. You just wouldn't do that. But people head into retirement that exact way. They don't really have a roadmap to follow, and that can be a problem.
It absolutely can. Let's talk a little bit about that income plan, that retirement income strategy that can help people feel a little bit more confident about their future in retirement. What all goes into that? What makes up that retirement income plan?
We've talked a lot on this show about income and the three-legged stool and how that's really become a two-legged stool. So what we look at first is, what are your primary sources of income going to be in retirement? Do you have a pension? Are you going to get Social Security? Do you know when you want to take it? Or not, I shouldn't say want, but when should you take it? As a better question, right? And then how much is that gap going to be that I need to fill from my investments, my 401k, my IRAs, all those things? What do I need to fill that gap and to plug that hole so that I can live the way I want to and have the retirement I always dreamed of? And Jen, that's exactly why I developed the Core Retirement Design, our proprietary system where we help people walk through that process of making sure, one, they've got the right amount of risk in their portfolio. Two, we want to make sure that they're paying the least amount of taxes over their lifetime. Maybe not today, but over their lifetime. We want to whittle that thing down to where hopefully they're paying next to nothing, if at all possible, later in life. And then thirdly, we put together that income plan. Look, that's our Core Retirement Design. Give us a call at 863-285-3815. That's 863-285-3815 to get started on your Core Retirement Design.
That number, one more time if you missed it, is 863-285-3815. So, Philip, I'll ask you a little bit about the tax increase side of this here in just a minute. But when we talk about our government's solutions or some of their attempts to solve some of these concerns, such as the federal debt, there are people who are worried about what could happen if they don't actually solve this, they default, and then that triggers a recession. There's other economic factors out there that people worry about triggering a recession also. What do you tell people who are concerned about that? The possibility of us going into a prolonged recession while they're trying to retire?
Well, I would go back to you kind of have to look at history, Jen.
Yeah.
And throughout history, we've had recessions, obviously. And I'm trying to think of what the longest recession I can remember in my lifetime. And it hasn't been extremely long. Now, it may have felt like it was long, right?
Sure.
Because there's a difference. Because even if I tell clients now, look, even if we didn't go into a recession right now, but our growth rate in the United States dropped below 1% in growth, it would feel like a recession to you and I because we're so used to our economy growing at such a fast pace.
Sure.
And so, look, I mean, I just don't foresee that we would have a prolonged, meaning more than a couple quarters of a recession before we started being able to dig out of it. Okay. And remember, the definition of a recession is 2 quarters with negative GDP. And so when we look at that whole scenario, right, you got to get ahead a quarter before you know that you're in a recession.
Right. There's a lag there. Yeah.
There's a lag. And so normally by the time that you can really say, quote, I'm in a recession, you're on your way out. I mean, historically, that's what I have seen. And so I would be incredibly surprised if we had a recession that lasted 4 quarters. I mean, is it possible? Absolutely. But I just don't, and everybody says, well, this time's different. You know what? In 2000 and 2001, when the .com bubble busted, that's the first time we've been there. Yeah. In 2008, when the mortgage crisis hit, that was the first time we'd ever been there. So every time we see this happen, it's the first time we've been there. And so, it's never been like this before. You're right. Every time we get in a situation like this, it's never been this way before. And yet, through the sheer tenacity of the United States people, we get through it. And, and so I just feel like maybe that's a little optimistic on my side. I feel like I'm a realist. But I feel like that's what we have to look at, is that, yes, it will be painful if it happens, but we will get through it and we will get to the other side of it, and the United States will flourish again.
Yeah. Just we do want to maintain that. I like that positive attitude, because there is so much negative news. I mean, if you follow financial news, economic news at all, we've been just plagued by all these negative economic headlines this year. Persistent inflation, tax increases looming on the horizon. We didn't even really get into that a whole lot, but that's another issue here, Philip, that we've got to be mindful of. The possibility of our federal government defaulting on its debt. Some people are even concerned about the money we have in the bank when you see some of these high-profile issues and bank failures. It's no wonder that so many people, Philip, feel uncertain about their financial future, but that's where you can help.
Absolutely, Jen. And I got to throw this in there. I would be even more concerned if I was working with a financial professional who had never gone through a bear market, who had never gone through a recession. I mean, that would be even scarier, in my opinion, because they don't have any track record to run off of. And so, there are so many factors out there that have a negative impact on our economy. And even when you've done a great job of saving, there are missteps that can cause you to spend down your retirement savings just too quickly. Mm-hmm. And it doesn't matter if you're living a simple life or if you got grandeur ideas that you want for your retirement. The one thing that you'll need in retirement above everything else is you got to have income. Yep. You can't live without it. And, you can't stop buying groceries. You can't stop paying your water bill and your electric bill because you ran out of money in your retirement accounts. Or if it took a hit in the market and it went down substantially, that could be a big issue. Or if taxes go up. Here's how I can help. Through our core retirement design, we can help you design that retirement you always dreamed of. We look at the risk you have in your portfolio and make sure it lines up with where it should be. We look at where you are from a tax standpoint and what can you do to be in a better position, and how can we help you accomplish that? And thirdly, putting together that retirement income plan, a written retirement income plan that gives you that certainty in retirement. Folks, listen, I know from experience that 70 to 80% of the folks out there listening to me right now don't have a written retirement income plan. Give us a call at 863-285-3815. That's 863-285-3815. Schedule your core retirement design.
This is the Statler Financial Radio Show with Philip Statler. We'll be back.
In times of volatility, the only wrong move is not making one. Call Philip and the team at Statler Financial Services today and find out where you currently stand with your portfolio. 863-285-3815. That's 863-285-3815.
Remember that first paycheck when you started working all those years ago and you looked at the net amount and thought, whoa, what happened here? Well, it could be this way with your retirement accounts. You know how much you've saved, but if you haven't planned for Uncle Sam, you could come up short in retirement. With tax laws constantly changing, there's a lot you need to know to make sure you're not paying more than your fair share. Philip Statler and the Statler Financial Team have helped hundreds of families plan for retirement for more than 20 years. They'll help you create a plan that shows you how taxes could affect you now and in the future. Set up a visit with Philip Statler and the team at Statler Financial. Just give them a call at 863-285-3815. That's 863-285-3815. Make sure you know how these changes could affect you so you can avoid some of those whoa moments in retirement. Call 863-285-3815. Firm offers insurance services but may not give tax advice. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Time to retire right. This is the Statler Financial Radio Show.
Thanks for joining us today on the Statler Financial Radio Show with Philip Statler. He is president and CEO of Statler Financial Services, in Sebring. And as we talk today about preparing for retirement, millions of Americans' retirement money is in something like that 401k or IRA. As a whole, U.S. retirement assets are more than $32 trillion, Philip, and over half of that, more than $19 trillion, is in IRAs and defined contribution plans. So we have a lot of money in these things. It's no wonder that people are wondering, what do I do with them once I retire?
Yeah, so that's a lot, that they've been able to build up in their savings, and it's good that they're doing that,
yes,
right? Because so many people, if they did not have that, think of what would happen.
Oh gosh, right.
Think about what this country would look like if we didn't have 401ks and IRAs, some tax incentive to save.
Mm-hmm.
Folks that are putting money away, that's a good choice, a good decision.
Right.
They made the right choice, and that's how they can accumulate enough money to make sure their retirement is really what they want it to be.
Right.
The problem is when you have to start taking money out, where do you take it from? You got so many different accounts. And so I think that's an area that we really have started to focus a lot on.
Yeah. And I think that's a really good point. If you have started putting money in one of these types of accounts, that's the right decision right there, just to start taking that step to save, especially when you have an opportunity to automate that savings. It really makes it an easier way to build up your savings. But what we need to realize here, when it comes to the different options for these accounts, you need to understand that the type of 401k or IRA that you have, that matters when it comes to how your retirement income will be taxed when we start taking money out of those accounts. That's really one of the biggest factors that we need to be thinking about, wouldn't you say?
It definitely is, and on top of what you just said is, don't forget that most employers, not all, but most employers actually match what you put in.
Yes.
So you're automatically making money by contributing to that retirement plan. So, but you're right. I mean, I think that when we look at money and 401ks and IRAs, is we need to understand the tax implications that we're creating for ourselves down the road.
Mm-hmm.
And that money that you're putting away now, if you're putting it into your 401k, traditional 401k, then you're going to have to pay taxes on that money eventually, right? And so that's one of those things that we need to make sure that we put into place. What is that really going to do for me? What tax bracket am I in now?
Mm-hmm.
And where do I think I'll be down the road? Now, I think back to, and this will show my age a little here, Jen. I can remember back when IRAs kind of first became a deal.
Yeah.
And because, that my accounting and tax background, that's, we put money in your IRA, right?
Right.
What we in that profession didn't realize is that a lot of folks were going to end up in a higher tax bracket when they retired than what they were when they put that money in.
Okay.
So when it comes to those accounts, we need to understand that there's pre-tax money in those 401ks, traditional IRAs, that's traditional 401ks, traditional IRAs, the 403Bs and 457 plans. So that's money that you got a tax deduction for or never paid tax on those contributions. So you're going to owe tax on that money when you take it out. Then there's the post-tax retirement accounts, and that's just going to be your Roth IRAs. And now a lot of 401ks have Roth 401k provisions within them. So unlike traditional IRAs or 401ks where you got a deduction from taxes when you put money in, the Roth you don't. Mm-hmm. You're going to pay the tax today on that money that you're putting in. However, it's going to grow tax-free forever until you start taking money out of it. Mm-hmm. So that's really kind of the benefit of those Roth provisions.
We need to be thinking about the tax aspect here We also need to understand that there are rules for taking money out of these accounts, Philip. There are
Just
rules
a couple.
for
Just a
putting
couple
money in
rules.
too. Right? I mean, there's caps and there's limits. I mean, there's so much stuff. We're dealing with the IRS here. What do we need to know about when we have to start taking those what we call required minimum distributions? And I guess first explain what that means for people who aren't sure what a required minimum distribution actually is.
A required minimum distribution is an age in which the IRS or the tax code has drawn a line in the sand and says you must take money out of your traditional IRA or traditional 401k because they want you to pay tax on it.
Right.
Up until about 3 years ago, forever and ever and ever, that age was 70 and a half. And then the Secure Act was passed. And they moved it from 70 and a half to a simple 72. So the year you turned 72, you had to take a required minimum distribution, which was based on your life expectancy. Now, we just saw the passage of Secure Act 2.0 in December of last year, taking effect this year. And so they moved that age to age 73. Okay. So age 73 now, you have to start taking money out of your retirement accounts because Uncle Sam wants you to pay tax on that money.
Yes, he does.
Right. And so again, that all goes to the reason that we created our core retirement design, right? Especially the tax aspect of that core retirement design to make sure that you're paying the least amount of taxes over your lifetime and your family's lifetime. Folks, look, if you don't have any idea the tax implications of where you are right now when it comes to your retirement accounts, that can be a problem. Give us a call right now at 863-285-3815, and let's walk through our core retirement design where we'll help you design the retirement you always dreamed of. And a big sector of that is tax planning. Again, that number is 863-285-3815. Give us a call today to start the process.
That number again is 863-285-3815. This is the Statler Financial Radio Show with Philip Statler. He is president and CEO of Statler Financial Services. Just so many things that we need to be aware of, Philip, as we start taking money out of these different accounts that we have for retirement. And not only do we have to think about the withdrawals that we'll be making and those taxes that come into play, there are also penalties that can apply if we don't follow the rules. And this can get really tricky, Philip, even in areas of like an inherited IRA, things like that. Even death isn't an excuse to skip an RMD. We've got to be really on top of this. So what do we need to know about how to avoid those penalties for failing to comply with the rules for taking money out?
You're absolutely right. And I will just say, first off, is that, look, if you're in that boat where it's time to take money out, you definitely need to consult the tax guys to make sure that you're doing it right and doing the right things, right? So, but that having said that is that we need to make sure that we take the required minimum distribution, because if you don't, there is a penalty tied to that. That penalty changed with the passage of the Secure Act 2.0.
Right.
Because it used to be a 50% penalty. They backed it off a little bit to 25% penalty, I think is what it is now.
Yes.
But nonetheless, it's a penalty and it can hurt. You don't want to give the government any more money than we already have to. And so that's a big part of putting together the income plan, so we make sure that we've got the required minimum distributions in place and we don't miss one, because it can be hurtful.
Right. So how do you talk to people about a withdrawal strategy for taking money out of those different retirement accounts, being mindful of things like the penalties if we get it wrong, thinking about the tax implications? There's a lot to coordinate here when we start needing income in retirement. How do you talk to people about having a strategy for withdrawing that income?
Well, I think that a lot of it relies, for us anyway, here at Statler Financial, on the income planning process, right? Because we detail that out as to what that looks like. I'm sure that we'll talk about it eventually within today's show, is, how do we keep from having to even take required minimum distributions, right? How can we stop that whole process, right? And we'll talk about that a little later. But and to me, that's the key. is to get ourselves in a position where that's not an issue. But in the meantime, and for people that are in the ultra high tax brackets, well, then we want to make sure that we've got that outline systematized where it is a scheduled event and on autopilot. So it automatically comes out of folks' account every year. So it's the first year you have to be careful of, right? Because if you miss the first one, then that kind of messes everything up. But once we get it started, then we like to put it on automatic. So hey, they're going to get the check every December or every October of every year going forward.
Let's just talk real quickly, and I do want to get into that on the other side of the break, Philip, what you were just talking about there. We'll definitely make sure we get into that, about that situation where, or some of those strategies to think about where maybe this isn't even something that we're having to do. But as you are helping somebody analyze where they are, we just want to recognize required minimum distributions. They can trigger steep penalties if you don't follow the rules. And the last thing you want, Philip, is penalties and potentially higher taxes. Taking a swipe at your savings, that just leaves you with a fraction of the money that you were counting on for retirement.
That's right. And let's think about other things that require minimum distribution. I mean, that's if you miss it, right? Yeah. But what can it do on the other side? You take it. Now what happens? Well, it can easily push you into a higher tax bracket. It can make more of your Social Security benefits taxable. And in some cases, it can even be so much that now your Medicare premiums get charged a surtax. People look at me all the time. Well, I didn't know they could do that. Oh, yes, they can. And so if you make too much money, you got to pay a higher Medicare premium surtax. And people don't realize that until it's too late. And so just some things to put on your radar to make sure that you don't miss those things, folks. And that's exactly why we do and put together our core retirement design. Because it takes a lot of these things into consideration when we put together that plan for you. Folks, if you saved at least $150,000 for your retirement, definitely need your core retirement design. Give us a call at 863-285-3815. That's 863-285-3815. 3815. Give us a call today. Don't put it off another time. Do it now. 863-285-3815.
This is the Statler Financial Radio Show with Philip Statler. We've got more insights from Philip coming up on the other side of the break. Stay with us.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
You can't see it, but you sure can feel it. The economy is struggling right now. Do you know how it might affect your retirement? Some retirement plans take into account economic downturns, stock market dips, interest rate fluctuations. Does yours? Take charge of your retirement by calling Philip Statler at 863-285-3815. Philip and his team at Statler Financial have been helping families prepare for retirement for over 20 years. They will help address the current economic situation and help you create a retirement plan designed to give you the confidence to move forward. Opportunities can exist regardless of economic conditions. Call the team, Philip Statler with Statler Financial at 863-285-3815 and find out ways you can prepare now for your retirement. Call 863-285-3815. Call them now. Schedule a visit. Let's get started. Firm offers insurance services. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Welcome back to the Statler Financial Radio Show with Philip Statler and co-host Jen Rezac.
Thanks for joining us today on the Statler Financial Radio Show with Philip Statler. He is president and CEO of Statler Financial Services in Sebring, talking today about 401k and IRA decisions. No matter what you have, whether it's a 401k or an IRA that you have your retirement savings in, one thing is certain, you do not want to treat your retirement account like a big ATM. We don't want to just turn to this thing whenever it is that we need cash or we've got bills that are due. Philip, give us some strategies that you recommend when it comes to accessing the money in those accounts.
Well, you're right, because let's look at I'm going to talk about the little drawdowns first, right?
Yes.
What's the drawbacks of using it as an ATM, right? Is that before we know it, we've taken out more than what we thought, which pushes us into a higher tax bracket, meaning we have to pay more taxes. And a lot of folks, they don't take taxes out when they take the money out. And so then they get caught blindsided when they file their tax returns. Why do I owe so much money? Well, because you didn't pay as you go,
Right.
You just took money out. And so kind of the downside to using it as an ATM. The other side, though, is to actually create some distribution strategies.
Okay.
And so we have folks that use a lot of different strategies, but the first one is to take a fixed dollar, right? We're going to strategize what we need, and we're going to take that on a monthly or quarterly basis. Here's what I need. Let's take it out. If it's $15,000, and we'll take out whatever, a 12th of that every month.
Mm-hmm.
And that way we know we've got it taken care of, and it helps us budget for everything else. The other thing we do is we limit our withdrawals to whatever income it makes. Now, the only problem with that can be if you're in that required minimum distribution phase, right? Then it doesn't matter if it made anything or not. You still got to take some out.
Right.
But you could limit your withdrawals prior to that based on whatever income it made. That way it doesn't get decimated by you taking money out all the time. Mm-hmm. You can create what they call a floor. It says, okay, this is the kind of the maximum I'll take out. Or my favorite is you bucket your money.
Oh,
We use a bucket system where we have money in different buckets that are going to last for different periods of time. And we know how long they're going to last, and we're going to know when they run out what the next bucket is we're going to use. The other one, and a lot of people do this one, right? They say, Philip, I don't need the money. As a matter of fact, they get angry, right? When I tell them, hey, you have to take money out of this account or be penalized, and they get angry. But that's one strategy is I'm just going to take the minimum RMDs, the required minimum distribution. That's all I'm going to take. And so I think that's probably, those are the main ways that we see people kind of strategize on how they're going to take their money out.
So how do we figure out how much income we'll need these different accounts to generate? Just kind of taking it back a step, how do we go through and figure out so we know if we've got enough to pay the bills to cover the things that we want throughout our retirement?
You know me, and most people that listen know I'm very, very conservative. Mm-hmm. And because the markets giveth and the markets can taketh away.
For
and
sure.
So we want to be really, really conservative with our numbers. So we'll use, somewhere between a 2 and a 4% return, depending upon what type of an account we have it in. Sometimes we'll go to 5%. If we have it in a stock market account, we'll say, hey, look, it's going to average 5% over the next, 10 years. And that's a pretty safe bet. At least it has been historically, right? And so that's kind of the numbers we look at when it comes to generating that. If you've got somebody putting together a proposal for you, you think, hey, I'm going to make 7%, I'm going to make 8%, run, because, that's not going to be the typical ups and downs of the market, especially when you seem to be pulling money out when it's going down. So just a little heads up there. And folks, but all this stuff that we've talked about is the things that we look at when we put together our core retirement design. When we design that retirement that you want and always dreamed of. Folks, it's all about planning. If you're going into retirement without a plan, that can be a problem. And the planning doesn't start the day you retire. The planning needs to start, 2 to 5 years before you get ready to retire. Right now, don't get me wrong. If you haven't got a plan and you retired, call us. You need a plan. We need to have a plan in place. Give us a call at 863-285-3815. That's 863-285-3815 for your core retirement design.
This is the Statler Financial Radio Show with Philip Statler. That number again, 863 285-3815. Philip, I want to talk a little bit about, for people who like the idea of not having to worry about these RMDs. Some people might want to have tax-free withdrawals later on. They might want to have a tax-deferred account, convert that to a Roth strategy. As you said, sometimes people are kind of angry when they find out what's going on. So other than anger management classes, let's talk about some of these other strategies that we might use here.
So it comes down to this, and this has become a big deal for us, is tax planning from the standpoint of Roth conversions, right? So Roth conversions don't eliminate taxes.
Okay.
They just bring them faster, right? So a Roth conversion is this: we take a traditional IRA or traditional 401k and we move it out of that to a Roth. Now, when you do that, it's not a tax-free event. You have to pay the tax due at your ordinary income tax rate when you make that conversion. Now, you can have withholding taking place, but so all in all, though, that it means that we may have to pay some tax, more tax than normal, as a matter of fact. And so there are times that it really makes a lot of sense. I mean, like crazy sense. And so often I see people not doing it. Like they pay no taxes. They have no tax liability, but they're sitting on an IRA. And they're wasting that 10 and 12% tax bracket when they could be taking some money out a little at a time, because it's not a one and done, right? It's not I have to do it all right now. I can systematize my Roth conversions. And that's what our planning process does, is we put together that Roth conversion plan, say, okay, this is what it looks like for you. We need to take out X number of dollars and convert them every year in order for you to ultimately end up in a tax-free situation where you never have to pay taxes on your IRA again. And so it's a process, and there can be some damaging effects in the process of doing it. You have to weigh it, right? You have to weigh out the pros and the cons. Some of the cons are you may have to pay more taxes on your Social Security benefits. You may end up having to pay higher Medicare premiums for a short period of time.
Okay.
A couple of years. However, when you look at that, you have to weigh out that versus what happens if taxes go back to what they used to be in the 70s. And so people forget what the tax rates were back then.
Right.
Well, they were in the, 50, 60, 70% range if you made enough money.
Wow.
So, you have to weigh now. I think it's safe to say that right this minute, we are paying the least amount of taxes we're ever going to pay. The tax rates will, I just don't ever think they're going to be this low again in our lifetime. And so it is an opportunity to start to make this change, but it doesn't come without a price. And that's why the planning is so important, that you have that plan in place. Right.
That is a really good point. So as you are preparing for retirement, you're trying to think about things like the tax implications of the decisions that you're making, the planning decisions that you're making. As you're thinking a little bit about, have you saved enough? Where should you save it? How can you help make sure it will last after you leave your job for good? Philip, you can see why people have so many questions here as it relates to preparing for retirement. And I'm guessing a lot of our listeners today have very similar questions as they approach retirement. What are they supposed to do to help manage what they've saved?
Well, I think one thing is the sooner you start, the better off you're going to be. I mean, I've sat down with people that are going to retire in 5 to 10 years. And one of the things that we've done is because they were putting money in traditional 401k. I said, we're going to stop that right now. And we're going to start using the Roth part of your 401k.
Okay.
Let's start using the Roth. I mean, that's what I personally do. All my 401k money goes into a Roth part of the 401k because I know I'm paying the least amount of taxes now that I'm ever going to pay. And so there are so many other opportunities out there We have clients that are on a 5 and 8 year plan to convert their IRAs to Roths. It's like I said before, it's not a one time and you're done.
Mm-hmm.
That's why the planning is so important. And you need to find somebody that understands that process of planning and can help you not only implement the plan, but actually put the plan together.
Right.
Right. That's so crucial right now. And you see in this industry, a lot of people, I can't help you with that. I can't help you with any tax stuff. I can't help you with anything else. I can only do your investments. Life's bigger than your investments. And I consider myself to be a retirement coach, right? I want to coach you in that process of retiring and through that process of retirement and do the best we can to make sure that you're on that winning team and that you end up where you want to be and have that retirement you always dreamed of, Jen.
So let's talk a little bit about that, Philip. How can you help people analyze just where it is that they are right now so we can start figuring out what else needs to happen within our plans so we're able to hopefully achieve those goals that we have? Walk us through what this looks like.
Absolutely. So our core retirement design, we start with the analysis where we analyze your current portfolio, ascertain what that risk looks like now. Well, how much risk do we have in our portfolio? How much risk should we have based on your age, based on your risk tolerance? When do you want to retire? Those type of things. Second, we're going to look at optimizing from a tax standpoint. Third, we're going to put together that income plan. When that's all packaged together, you'll know where you are and you'll know what it's going to take to get to where you want to be. Now, the question will be at that point is, do you want to follow that map or do you want to go create your own? Right? That becomes the issue. What do you want to do? Give us a call, 863-285-3815. I think it's a simple process. I think people make it harder than what it is sometimes. But let's get started. Let's not procrastinate anymore. Give us a call at 863-285-3815 for your core retirement analysis.
This is the Statler Financial Radio Show with Philip Statler. More insights coming up after the break. Stay with us.
Do you have a retirement plan but would like a second opinion? Call Philip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815. Remember that first paycheck when you started working all those years ago and you looked at the net amount and thought, whoa, what happened here? Well, it could be this way with your retirement accounts. You know how much you've saved, but if you haven't planned for Uncle Sam, you could come up short in retirement. With tax laws constantly changing, there's a lot you need to know to make sure you're not paying more than your fair share. Philip Statler and the Statler Financial Team have helped hundreds of families plan for retirement for more than 20 years. They'll help you create a plan that shows you how taxes could affect you now and in the future. Set up a visit with Philip Statler and the team at Statler Financial. Just give them a call at 863-285-3815. That's 863-285-3815. Make sure you know how these changes could affect you so you can avoid some of those whoa moments in retirement. Call 863-285-3815. Firm offers insurance services but may not give tax advice. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Thanks for joining us today on the Statler Financial Radio Show with Philip Statler. He is president and CEO of Statler Financial Services in Sebring, and I am Jen Rezac alongside. And Philip, you get questions each and every week about all things retirement, so we are going to get into our Statler Financial mailbag here. Carolyn from Avon Park says, my husband just retired and I am planning to leave my job within the next few months. I just haven't been able to get my replacement trained, but then I'll be all set to retire. I am excited, but already my husband has started to pinch pennies everywhere. I can't even get him to talk about taking our first trip after I retire. This is already driving me crazy. How do I get him to get comfortable with the idea of spending some of our savings on some of the fun things? Because this is what we saved it for.
We see that so often when folks
Yeah.
get ready to retire because they're like, yeah, I don't want to spend that. I might need it later. And I got to say that when it comes to that, it's really about the plan. And I'm going to guess, based on this, that you haven't put together any kind of income plan, because an income plan is going to be, okay, here's how much money I need to live off of and to do those things, right? We plan for that trip, or, a couple trips a year to see the grandkids, or just to take the cruises and those type of things. I mean, that's the whole idea of retirement, is to be on a different timetable than when you were working, right? And
Right.
and that means taking some trips and doing the fun things. And so I'm going to say that it comes down to having that written retirement income plan, because that written retirement income plan would give your husband some certainty, right? He would understand that, oh, I can take this amount of money now because I can see in year 25, I still have money in my accounts, and I've been able to take all this money out and live in retirement. And so I think that's a big part of it, Jen, is just making sure that folks have that written retirement income plan, because it does give that certainty to retirement.
863-285-3815, by the way, is how you can reach Philip Statler and the team at Statler Financial Services. That's 863-285-3815. Our next question is from Paul from Sebring, who says there are some local charities that we have regularly supported throughout our careers. We don't want to completely abandon those causes now that we're retired, but it does seem kind of scary to keep giving as much when we are on this fixed income now. Should we hold off on charitable giving for now if we're worried about the financial impact?
I'm not going to say you should hold off, right? Because if you have a plan in place, then that plan can help impact those charities, right? We know that we can plan for that within our income to have the extra money we need to continue to do what we've been doing. It's all about putting together that budget, Paul, and knowing what money we need, so we know what we need to draw from. So if I got my Social Security and my wife's Social Security, and maybe we got a pension, well, there's a shortfall in there. And that's what your money, your IRAs and stuff are for, is to make up that shortfall. As long as we do that and you include those charities within that budget, then you should be good. I want to move past that, though, and give you some opportunities down the road. Because if you're just retiring, this probably isn't going to apply to you yet. Right. So some different tax strategies when it comes to charitable giving, because once you reach that age of 70 and a half, you can start using your IRA as a charitable giving mechanism. We can do what's called a qualified charitable distribution. And it's pretty cool, Paul, because what it does, it helps offset your required minimum distribution, and can actually make it where you have to pay no tax on that money that you give to charity.
Wow.
Again, that's down the road when you reach 70 and a half. There's other avenues that we can bunch up some stuff called DAFs, that's donor advised funds, where we can make a huge charitable contribution now, get the tax deduction for it, but limit how much we give those charities on an annual basis. You decide when they get the money. So, that's the other option when it comes to charitable giving. That one can be done at any point in time. Again, the QCDs only work once you reach that magic age of 70 and a half. But man, if you're a charitable giver, that is like a gold mine for folks. But again, Paul, it all comes down to that income plan, and having that income plan in place allows you that certainty that your money is going to last. Maybe it ebbs and flows a little bit, but you know that you can still take care of that charity that you've been taking care of for a long time.
863-285-3815. Again, that's the way you can reach Philip Statler and the team at Statler Financial Services. That's 863-285-3815. 3815. Philip, let's move on to another question here. Ron from Wauchula wonders about Social Security. Is this benefit going to be taxed? I cannot figure out what to expect with that.
It depends. And nobody likes that answer, but it is the truth, is that we won't know if your Social Security benefit is going to be taxed until we know what other income you have that is going to be taxable for the year in which you start taking your Social Security. It's one of those things that there's this complicated IRS formula to determine how much of your Social Security ends up being taxable. The short answer is that most people end up having to pay some tax on their Social Security. Now, let me just say, if that is the only income you have is your Social Security benefit, no part-time job, no investment income, no IRA income, then most likely you won't have to pay any tax on your Social Security because you don't have any other income. I think that becomes part of the deal. And so, but let me go back, because talking about Social Security being taxed, the bigger question should be, when should I take my Social Security? When does it make sense for me to take my Social Security? And that comes back to our core retirement design and the third part of that, where we put together that income plan. Because our income plan takes into consideration, when are we going to take Social Security? Because we'll look at different options. And you didn't tell me your age, Ron, but let's just say you're 65. Well, you got to wait 2 more years to probably get to full retirement age. And so does it make sense to wait those 2 years? Or should I go ahead and take my Social Security now? Those are some of the answers that we get when we put together our income plan. So it's important. Again, it feeds back to that, making sure that you've got a plan in place that takes into consideration what those things look like. I do want to remind people where they can send us their questions, because we like to get questions every week. And so if they can actually email us their questions at statlerfinancial@gmail.com. That's statlerfinancial@gmail.com. And love to get the questions in.
As we close this out today, let's just talk real quickly about people who maybe they have questions, and not only do they want to get some questions answered from you, but they'd like to start learning a little bit more about their own financial situation, getting that analysis of what they have going on so they can start figuring out the steps to take from here. Talk a little bit about what this looks like, the time that you can spend with them to help them get some of those initial questions answered.
You know, one of the things that we like to do is we gift 30 minutes of our time. You know, we'd love to have a 30-minute phone consultation with you. We'll answer whatever questions you have about your retirement, about getting ready for retirement, about Social Security, you know, whatever it may be. We'll look at all the different aspects of your retirement. What do you have saved for IRAs or 401ks? What do you have? Or do you know what your Social Security is going to be? That'll be one of the big questions I ask, because a lot of times people don't know. If they don't, we'll make sure that you get the information you need to get that for us, so that then that helps you determine when's the best time to take your Social Security. All of that is part of our core retirement analysis phone consultation. Give us a call, 863-285-3815. It's that easy. It's a phone call, 863-285-3815. Don't let this opportunity slip away.
That number one more time that Philip has shared throughout, 863-285-3815. And be sure to tune in again next week for more insights from Philip. Have a great week.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of